Hello students, today we are going to discuss the loan products part 2. So basically the question arises here, why to take a loan. So suppose if we have a certain life goal, so we need to complete that goal, so we need to manage the finance, and that's why we have to take a loan. Sometimes we have an immediate financial requirement for any emergency, so we have to go for a loan, and sometimes to make a financial arrangements for unforeseen expenses. So that is also the purpose of a goal. There are some points which you have to consider before applying for a loan. So one is the credit score. So credit score means the credit history upon your past borrowings, past repayment records. So on the basis of this credit score, you will get a chance to get a loan easily. So basically, in general, the credit score should be 750 or above to get a loan easily. Then the rate of interest, so we need to check a loan interest rate before you apply for a loan, so that the lower interest rate could be the better one. Then another thing is the processing fees and other charges. So when you apply for a loan, and in case you miss your payment deadlines for your loan, so you may likely to pay processing fees penalty also. And you have to research out, you have to work out also for the best rate for your loan, so that you have to pay less interest as compared to other cases. The basically eligibility for a loan is particular for the salaried and self-employed. So the age criteria is 23 to 58 years for the salary class, and the income range should be minimum 25,000. The civil score should be above 750. In case if you are a self-employed, so the age criteria is 28 years to 65 years, and the minimum turnover should be 40 lakhs. These are some document details like an application, identity, residence proof, bank statement, processing fees check, salary slips in case of business, the proof of business, form 16 in case of salaried, in case of self-employed, last 3 year tax return, last 3 years balance sheet details. So these are the few comparison of interest rates about the personal loan interest rates. So this is the way how you have to make analysis, like depend on two criteria: interest rate and processing fees of various banks are vary from different to different situation. These are the example of a car loan interest rates. So how it may vary, how it is conditionally attached. So these are the general idea. This is an education road interest comparison. Thank you, student.